So my name is David. I work at Truflation. I head up BD there. Truflation is a real-time CPI metric. We track 18 million price feeds throughout the economy and built that on top of Chainlink oracles to provide that to DeFi and CeFi and the whole world. On top of Chainlink's build program, we basically wanted to just open up the world of economic data to DeFi users. So the overview of Truflation is that there's all these real-world metrics that need to be tracked. Bureau of Labor Statistics comes out with a monthly CPI. It tracks about 80,000 different prices. At Truflation, we track 18 million different price points throughout the economy. So how that ties into Chainlink, most of our users come in on the Web 2 side and are just looking to build on top of our API. On the Web 3 side, we have all these users that want to build immutable products, and having censorship-resistant data is just one piece of that. So as these come out and are built out on top of Chainlink oracles, we're able to go to Web3 developers who know the ecosystem well, know the Chainlink ecosystem, and can build out new financial products. Yeah, so our CEO, Stefan Rust, was the CEO of Bitcoin.com for a long time, for a few years, built that company, 25 million different wallets. And in 2020, we saw a problem. The Bureau of Labor Statistics was coming out with incorrect data. Everyone in the US and UK and Europe saw their prices going up, and it wasn't aggregated and it wasn't collected by the Bureau of Labor Statistics. So we sort of came together and decided that data needed to be real time, it needed to be transparent, and doing that on top of Chainlink sort of allowed us to build out all these new and different products. A couple of our investors, including Coinbase and Bology, looked at us and said, wow, that would be an incredible place to start. We have all these data points and metrics, let's build a stable coin on top of it that's inflation protected, which is how Nuon came about, and that's sort of how we started in the Chainlink build program. All of our 18 million data points are then dwindled down into indexes, and all of these indexes are Chainlink oracles, so any Web3 developer can build on top of these oracles the same way they would on a lending protocol or the same way they would on a synthetics protocol. So they can use our real-world asset oracles, whether it's housing data or transportation data, and build immutable products on top of it. We started at Truflation because we saw a government system that was just basically corrupt, and they were publishing bad data, and there's $4 trillion worth of bonds that are linked to bad data. So when we looked at what we can do with Chainlink, the idea of building immutable products on top of oracles that are censorship resistant, that aren't changed based on the feeling of a CEO, and aren't changed based on the feeling of a politician. So I'd say builders in the space, especially in DeFi, especially in real-world assets, look at bigger problems, and that's something we try to focus on a lot. So there's a lot in crypto where people are looking to get a little bit extra yield, or maybe build something that's a little bit higher risk for higher extra return. I think one thing that Chainlink, it's important to them, it's important to us, is that protocols and builders are building things that the real world can use. So whether it's central banks building on top of CCIP, or really any sort of traditional firm building on top of Chainlink, recommend just sort of looking at what are some of the top end problems with our industry and build to fix those. Real world assets are probably the most important part of crypto, I would argue. As we look at stablecoins building on top of treasuries, for example, or we look at all these protocols sort of trying to integrate the real world, if you're only focused on the crypto economy, your total addressable market is very small. When you try to look at stablecoins that are trying to build for 1 billion users, or trying to sort of take over many of the traditional financial institutions, it's important that they're sort of building for that larger goal. And there just aren't enough crypto assets to do that right now. So real-world assets are incredibly important, whether it's bringing real estate on chain, whether it's commodities and metals pricing like Truflation brings, or if it's just sort of building these real-world products that are better than the ones that came before. For example, there's a large market of treasury inflation-protected securities that's on top of bad data, and what Truflation is doing is making that data immutable, so you can go out and build real-world products that bring value to users.